We're going to start today, we're going to focus on the German investment markets, taking a look at different sectors, where we see those as heading, where we are in the market, and importantly, where we're looking to, where are we heading in the markets, so that we can begin to give you a sense of, if you're investing in the market, what you can be looking for, what some of those key areas are. We're going to start with a brief presentation from Christian here from Savills Investment Management, just to give us a sense of, I suppose, where we are in the market, and we can use that then as a launch pad for the discussion. So over to you.
Yeah, so good afternoon also from my side. The brief presentation, I will speak about confidence, but also selected investment opportunities in the German market. Confidence, not really something the economy is driving in the German market, I think, which we are all aware of. We have seen the recent economic lead indicators, which have quite some negative results over the past month, especially in the manufacturing sector. I think this is what is worrying a lot of people with regards to the occupier market, and of course also for the investment market. However, it's important to know, I think, that we need to distinguish between cyclical challenges for the German economy and structural challenges for the German economy. On a cyclical side, just as an example, of course, a weaker global or a subdued global economy, as well as subdued consumer demand in the current market environment. So on the structural side, themes you are aware of: tax, bureaucracy, not really corporate friendly currently in the German market. Also, the green transmission of the German industries is a big theme. So it's a two-way impact on the German economy. I am sure we will discuss later on in the discussion as well, a bit more into detail. And this drives basically what you can see in the GDP growth forecast, a lower growth for longer. So it delays the German economic recovery on that end. So what is driving the confidence now? Heading in the right direction is inflation and interest rates. That's for sure, I think, the biggest confidence driver. Headline inflation, core inflation is shrinking. On the other hand, we have seen, as a consequence of these recent central bank actions to cut rates, which you can clearly see in the swap rates and government bond yields, which are at a level we haven't seen for, I would say, almost 2 years now. So the confidence coming rather more from the capital market side. On pricing for real estate, also sometimes where investors get more confidence on its pricing. Most recent, of course, prime yields communicated by the brokers show in 2024 quite a stable development. On the other hand, we do expect some more cuts from the central banks to come in the end, which gives, again, some more confidence around pricing, where we believe that repricing should be broadly completed in the German real estate sector, at least for the prime segment, which is important to highlight again here. What does this mean for the investment turnover figures? Highlighted here, free fall stopped, I would say, is something we definitely can underwrite. This morning, Q3 figures has been published by the brokers as well. We have seen higher transaction volumes this year than the previous year. On an annualized basis, figures on the right-hand side show, again, since 2 quarters, rather stabilization, which leads us to, indeed, the conviction that the turning point under debt market circumstances, again, inflation on a way of stabilizing, that the turning point is likely to be reached, and for the next quarters we expect a gradual upturn also on the investment market side. Coming just a brief snapshots to the selected investment opportunities. No big surprise for you, probably. It's the living sector, it's the logistics sector, with strong fundamentals. This is at least where core investors are looking at strong fundamentals, anti-cyclical, less cyclical driven income streams. And it's not just the German way, right? On the living sector, on the left-hand side, I put in the residential construction versus the national targets for a decade, undershooting for a decade, not just in Germany, also elsewhere, which provides some comfort around a new price level area, developing investment strategies still in the sector, especially for long income products. Logistics, of course, on the right-hand side, we have seen e-commerce, demand from the e-commerce sector, of course, also subdued, but reconfiguration of the supply chains will continue. If the economy will pick up, the logistics sector will be one of the sectors which should benefit also on that end. On a cyclical point, the structural themes, from our perspective, still in place, just a bit delayed, again, in line with the economic challenges. And maybe just to conclude, few highlights. Confidence, in our view, is rising among investors. As I said, repricing, from our view, largely completed. Further interest rates cuts are in sight, should be beneficial for the relativity of real estate to other asset classes, in particular to the risk-free rates. From an investor side, key focus on the structural sectors with strong fundamentals, but also, of course, as it's rather limited currently also in terms of opportunities, niches are gaining importance as well, feeded by a strong occupier demand, a strong structural demand drivers. Just to name data center, we will highlight for sure later on as well, temporary living, just to name a few of it, and to kick off our lively debates, I hope.
Great, thank you. Thanks very much, Christian.
Yeah.
Your work here is not done, so grab a seat and then speakers, if you could come up, that would be super. Let's maybe just start with a quick round of introductions. Let's start with you, Alex, at that end.
Yeah.
Just a brief, who are you, what do you do, so that we can all get a sense of the area that you're working in, and then we'll move down the panel and then everybody will know everybody else. Alex.
Great, thank you very much. My name is Alexander Hund and I'm the Managing Director of CTP for Germany and Austria. CTP is a real estate developer, developed to hold, so we are developing for our own. And we're mainly investing and developing for logistics and industrial real estate.
Great, Lars.
Thank you. My name is Lars Schnidrig. I'm a Managing Director of nexspace Data Centers, and we are a developer and operator of data centers in the DACH region.
Great. Rebekah.
Hello, hi, I'm Rebekah Tobias, co-founder and managing partner of Propela Ventures. We are a new strategy, a spin-off of a family office where I was the last 5 years running their real estate portfolios across Europe, including a self-storage platform which we built from scratch in Germany. I have worked in the past in industrial logistics offices and moving into more bed sector in the new role, which I'll tell you more about, and covering Germany as well as pan-European.
Great, Lars.
Thank you. My name is Lars Meisinger. I'm the CEO of DLE Group AG. We are an investment manager for about 2.2 billion in assets across land development, logistics, senior living, and we also have a mezzanine finance strategy. We're headquartered in Berlin.
Good. Christian, you didn't introduce yourself at the beginning, so now's your chance.
Yeah, thank you very much. Yeah, my name is Christian Müller. I'm head of research and strategy for Savills Investment Management. I'm heading the research and strategy department over there, covering the German client base going abroad, but also international capital, looking for pan-European strategies in the key sectors.
Great, thank you. And for anybody who doesn't know Real Asset Media, my name's Richard Betts. I'm the head of content. So I look at the content across all of the areas, so the journal's Insight, Impact and Real FDI. We run around 60 or 70 events a year, some online, some in person, around the world, looking at the types of things that are going to be driving the market. So less of a focus on what happened yesterday and more of a focus on the research, the analysis, the market insight, and what that means for investments going forward in the market. So let's, having said all that, I'm going to completely contradict myself and say, what has happened in the last year? What's the difference of investment markets? Because I remember EXPO Real last year as being slightly depressed, probably would be the word, in terms of the market. So what has changed? Are we feeling more positive? Let's start with you, Lars, from DLE Group's perspective.
Well, I think Christian kind of framed it already very well. I mean, we're seeing that the correction has happened, and we're now at sort of a stabilized environment from which we have at least some positive indicators to take more comfort.
Okay, good. And maybe one of the things we didn't pick up, Christian, that I just wanted to pick up is from the macro kind of analysis, where do you think we are going forward? Do you think there's good indicators? Do you think growth is going to recover? Do you see some of those elements like the reduction in potential reduction in interest rates driving things forward? What's your sense of that?
Yeah, I think you already almost make the point. I think I mentioned the cyclical and structural challenges for the macroeconomic environment, and in the end, this is also a result why the central banks were able to cut the rates, right? Just to support economic development, economic recovery. I think that's one step, solving the more cyclical things in the macroeconomic environment. On a more structural side, I think there is more up to the politics to improve the guidelines, the circumstances, and the framework in such a sense that you can invest again. Because what corporates need in the end to invest is planning security. And planning security you can only have if you have at least a medium-term plan. And I think that is what is lacking a bit in the German market, German policy. Again, it's more rather here and there, but not really a strategic midterm where the corporates can benefit on. And not just to finish maybe with the corporates, also there the willingness really to transform the business, which is required as well, because that is something where lead industries really on that end, let's say that we're a bit slow or late in terms of picking up developments and changes in the business.
And do we think, is this linked somehow to the political cycle? Do we think that there'll be, once elections come through, there'll be a little more clarity? What's our sense of that? Does that make a difference? Do you think there will be a difference from the election? Or?
It does. I mean, at the moment we are in a state where political uncertainty about the federal elections is prevalent. I think also that we will have to have significant impulse from the next federal government, which to increase reliability in legislation, especially for the construction and building sector.
Okay, good. It'd be interesting just to pick up on, I suppose, the international capital, what the international view is. Happy to pick that up from you, Rebekah, as well, because you're talking to international capital a lot. But everybody's views on this would be appreciated. How do you think Germany is being seen at the moment by the international capital?
I've always said this on most of your panels, Richard, that if there's any international investor coming into Europe, they're still targeting the top two gateway cities in Europe, which are the UK and Germany, and that is not going to change. They're the top largest economies in Europe. There's a lot of opportunity, and I do believe Germany provides slightly more risk at the moment for a variety of number of reasons, but therefore if you're opportunistic, like most US private capital and other private equity capital is, they're still going to be looking for those discounts, the bargain hunters, the distressed assets. There's so many special situations funds that have been raised to approach exactly these type of opportunities, and Germany will have quite a few of those working through the capital market cycle, and also just generally on the ground what's happening with lack of trades, and quite a few of this will also filter through with distressed debt. So we are at that point in the cycle as soon as the confidence returns, and by the way, Blackstone are probably leading the pack as far as private equity in the market. That will start to open the floodgates to a certain extent, and more people will feel comfortable going into the market now. But we do think where land prices are in particular, UK is looking very attractive relatively. We're not seeing the land price fall as significant in Germany just yet. But I do think that will start to come through, and we'll start to see a lot more of the distressed debt and private equity buyers in the market. From a family office perspective, and there's a lot of family money in Germany as well, we take a much longer term view. So if you have a 10 plus year horizon, you're not too worried about where your asset's going to trade in 3 to 5 years if you're looking at investing, particularly in nascent sectors like senior living, like self-storage. You're looking at trying to essentially institutionalize these nascent sectors over a much longer period of time. So we're building businesses from scratch and operating platforms from scratch, where in 10, 20 years, we should really start to, see these businesses really taking off. So there's a huge benefit in being able to take that longer term horizon.
Is that the sort of capital, Lars, that we're looking at in terms of the data center side as well? What sort of capital is investing there?
Yeah, we have also international capital. We have many investors who want to go into this market. And coming back to your question in the beginning, what has changed? I mean, the big burden was always the interest rate, obviously. And it remembers me well when you look back at 2008, when we had the financial crisis, there was also white or black. And now, obviously, there's a lot of smart money that wants to be invested. And I can confirm that all the big private equity funds, all the big investment managers have sufficient funds to invest. But as they should, they clearly look which niche, I think it's not, now it's working again, which niche, which product, but I think it's so exciting products currently. If you only look at, and I say this since 2008 when I started at Vonovia, at this time, the ongoing supply-demand balance in Germany when it comes to living, when it comes to data center, when it comes to maybe also logistics, there are so many, or service living, there are so many fields, and you can say a lot of points against Germany, but one thing is clear, the regulation, the overall long-term stability attracts capital. And this combined with interest rates, which are now obviously in the right equilibrium in the next, I think in the next 12, 18 months, we will see the equilibrium. So you have so you are clear about valuation, and that will definitely help to get more capital into Germany. And there is much capital waiting to be deployed. But I think in contrast, we don't have too many platforms or teams even that can work with this capital. So you need, because Germany obviously is a very local business, and you need then in each and every city at least, local teams. And this is what we simply don't have in Germany. Therefore, the investment decision, I think it's about location, it's about the team, it's about the product. And if all these three come together, there's sufficient capital going to be deployed.
Okay, good, thank you. And Alexander, just picking up that point, almost taking the reverse of that, I know that you've opened an office in Asia, in Japan, I think.
Yes.
Is that a reflection that you're expecting more kind of activity between Asia and Germany, especially? What's your sense of that?
Well, that is something, I think, looking at the German economy, what is happening right now is the transformation process. Looking, for example, to North Rhine-Westphalia, we had huge steel factories, we had huge companies with a lot of energy needed. They're closing their business due to costs. They're going to Brazil or to Asia. But that leads that we are setting a new capital in a way of workforce, in a way of land. And of course, looking at TSMC in Dresden or looking at Intel, and for example, the decision of Tesla coming to Germany is the long-term view. It's not the 5-year view. And the same for these Asian countries. And that is something we figured out, that there is the countries, and with that we close a little bit the tax borders in Europe as well, that the companies in Asia are for Europe. If they want to produce for Europe, they have to do it in Europe. And that is something that is happening. And for now, as we open up the one office in Taiwan, we can see that there's more and more requests if we can do projects together, that things are going to be developed because they see first companies are coming. We have workforce available, and Germany is still out there known for the creativity, for the liability, looking at the long term. And those companies are not worried about what will happen next year. They see the opportunity for the next 10 to 20 years to invest into Germany. And that is something I think we have to look at. And that's why we decided also to go to Asia and to provide the space to companies to want to come to Germany to invest.
Okay, good, Lars, you want to take that up?
Yeah, if you allow me, I would like to add to what Rebekah has said. I mean, opportunistic capital, which seeks 18% plus, is not going to clear the market. Yeah, I mean, it's good that we see activity and it's noticeable. And to your point about private equity firms also looking for partnership with local players to access. But I think we need to have a different type of capital willing to engage also in the value add to core plus space. And we concur with Alexander. I mean, Asia is obviously kind of bifurcated between China, yeah, which we are currently having a trade dispute with on a European level, versus Korea or Japan. We do also share the view that our intention is also to work and invite Japanese capital into Germany, and I think that looks prospecting, but that looks positive. But on the Chinese relationship, which we cannot detach ourselves as Germany from, I think that poses some significant challenges ahead.
Okay, good. I'm going to pick up a little bit now on some of the kind of market fundamentals, but also it would be wrong of me, given that we've got specialists in different areas, not to drill down into those specialist areas as well. And then, Christian, I'm going to come to you, because you've got then an overview of across a lot of the other sectors as well, so we can pick up on all of that expertise.
Sure.
But let's start maybe, Rebekah, just with you on some of those alternative markets. And I know there's, Lars, you're also in the senior living one, so we can pick up on different perspectives there. But what are you seeing? Plainly demographics driving this, but what are the key drivers here in Germany from your perspective?
Actually, the investment initially that spurred our healthcare division in Germany was a portfolio of hospitals and clinics, which we've owned for quite some time. And when we sold that, we spun a team out of one of the businesses and created a healthcare team specifically focused on asset-backed operating businesses in healthcare. So since then, we've gone into care homes and senior living, looked into a lot of detail on the rental side of senior living rather just the for sale side. And Germany actually has one of the longest home ownership rates of any country. So the whole PRS BTR model that we started, that really started taking off in the UK 10, 15 years ago, still needs to filter through a bit, and that's going to be a generational thing. So when people ask about, I think, senior living for rental, it is absolutely the future. How long it takes to become a more institutionalized market is a big question mark. We just don't know, because the older demographic today is still very much buy, own, live in our family home for a much longer period of time. So I think that will take a bit longer in Germany from a mentality point of view. But we still like the sector very much. The demographic play is very, very clear. We see the rise in 60 plus, exponentially. And so we know we need to provide better quality housing for that demographic. So a lot of, areas are focused on that. Student as well. So across the whole spectrum, I think of the living sectors, there's still a long way to go as far as supply and demand in Germany. And so we've been focusing more on the core markets for these strategies. That's where most activity is. We're seeing prime residential in cities like Hamburg trading very cheap for relative terms if you can get access to it. A lot of the vendors are private individuals, and so there's always some vendor risk with buying off, privates rather than institutionalized capital. But I do think if you're willing to take that risk and getting in now, there's a huge amount of upside going into prime resi.
Okay, good. And Lars, I'd be interested to pick up from you as well in terms of that kind of senior living space, but also what's happening in terms of land as well, and the strategies around that.
Developing, I mean, we've had a lot of issues with planning. Sorry, just to jump in. Apologies, Lars. Yeah, I want to go into. I just want to say quickly on the planning side, Germany needs a real planning reform and a complete overhaul, because no digitalization in the planning space it's a killer. And curious your thoughts.
Yeah,
Well,
we're not blaming you, Lars.
No, definitely not.
Thank you. Let me just perhaps take a question in reverse and start with land, because Rebekah mentioned land still needs to come down in price. We respectfully disagree as one of the largest land banks in Germany.
Yes, this is true. You buy way more land than we do.
I think, for us, it's obviously important to see the fragmentation in legislation and to ease. And I think Berlin has been, with its faster building legislation, which comes in force, being helpful in that regard. We, from a land banking perspective, are sort of at the outest of the value creation, so we are sort of the earliest in value creation. There's still a noticeable requirement for pure equity financing. So for us, it will take some while.
Yes.
But we have done transaction this year, and we're quite we're still seeing perhaps some more this year. On the senior living side, I cannot agree more with Rebekah. We have about 22 million citizens now above 65. We are working sort of in the senior living assisted living sector. I think there's a huge investment demand, about 70 billion to be deployed, and it's a very fragmented market with still a huge sort of niche attribute.
Yeah,
and I think it's interesting that one of the lessons I think from the UK market as well is just how quickly senior living can move once it gets accepted. It moved very rapidly, in my view. There was no way I would have thought my father would have moved into senior living, or my father-in-law, but actually both of them have done. And that just shows how far how quickly once the product is there and established and people can see it, actually how rapidly the uptake can be, I think. Let's drill down a little bit into the data center market. We had a session already today on data, AI, what's happening, digital infrastructure. But specifically here for Germany, Lars, what are the drivers here? Where are the opportunities, particularly for the data center side?
Well, for me, one of the most drivers is now the regulatory framework. I said this morning. Last year, the new Energy Efficiency Act came into effect, where there's a certain paragraph only for data centers, and that explains you what you have to do as a liable board member of a company, right? So you can't store your data anymore in your own company, but you have to transfer it to a specialist, such as a data center operator. Because otherwise, we see this in Germany, there it's already in effect. We see this in Austria, which is one of our other markets, where it's coming in this very moment into effect. And regulatory frameworks, legal acts always move the market. We saw this in the residential sector in Germany, and now it's obviously in the data center. This is an EU that's steered, so to say, from the European Union, and it's basically saying, for instance, your power needs to be from renewable energy. You need to have a certain efficiency, how you run your management of your data, and all these things I think it's difficult to report from the German Mittelstand, if you want so, and this is definitely driving. This is one thing. And then, as in the German residential sector or senior living, you have an ongoing demand-supply gap, very simple speaking. So in Europe, there are data you can, one is, I think, very impressive. Only to cope with AI in Europe, you need roughly 15 to 20% more data center in the next years throughout Europe. These are massive investments. And then on the flip side, you don't have so many specialized, operators, developers. If you go in particular on the EXPO and ask maybe 100 developers, have you ever developed a data center? I think 97 will say no, because we haven't done this the last 20 years, because the last 20 years real estate was simply on other fields like office, residential, logistics, etc. So there's a huge gap also in Germany in terms of know-how to develop this. And this I also hear from many investment managers, from many investors, from many banks. So we have to cope up with this, or catch up with this, better to say. And this is driving yields then on the one side. And of course, we don't know how this all ends in the next 1, 2, 3, 4 years, how the demand is really there, but it will be massive. So, and from the development operator side and investor side, there will be an equilibrium that will be driven by the price, I think, at the end, as usual.
Okay, good. And Alexander, just in terms of the, we're covering Christian's two top ones, which were living and also logistics. So let's pick up on the logistics side here in Germany. What are the trends? You mentioned a little bit about nearshoring, potentially friendshoring. E-commerce, has that plateaued now? Is it growing? I suppose what's driving the market here? And is that related to specific locations? Where are the opportunities?
Well, I think we have to differ that we are not just logistics. We are also doing production and research and development, buildings and real estate. And looking at the logistics, I think we had a boom through the COVID pandemic, and that was driving the logistic developments, and the yields were high. So it was just really booming sector over the last 5 years. It came down, it flattened, the curve flattened. I think we have a huge amount of facilities empty right now, as far as I can see it, and also that the rents stabilized on a certain level. They're high, but they stabilize, so they're not going further up. So I think that's why we are not only looking at logistics, that's why we decided to be in Germany, also looking at what is the key driver in Germany, not just for the last 5 years, for the last 100 years. And that was the German economy, that was the German Mittelstand. And I think that is something we are looking at, also from the real estate side, because there also in logistics you get rental agreements 3 years, 5 years. If you look at those German smaller Mittelstand companies, you get 15 years, 20 years. They are still investing. They need more time right now for decisions. It takes not just a month, it takes half a year. Maybe you have to work on that deal. It takes more time, more effort. But on the other hand, if you close such a deal, you have 20 years stability. The company won't move. They will stay there. And still, I think there you can see, looking at the economical facts that Christian presented earlier, is that what you can see right now. Interest rates are coming down. We're getting more and more secure, and I'm hoping that the elections next year will just fade out that uncertainty that we have right now, and that we come back to a stable economy, and all these decisions that are postponed right now by the economy are then done, and then we are getting back into a real bright future. But I think then we're back on track, and that drives again the transformation right now we're looking at.
Okay, and just for those who may be watching as well from distant shores, we're talking here about light industrial, I guess what might be known as light industrial parks in Germany, and I guess that can then be fairly widely spread across the country, or is that also focused on the top cities? What's the situation?
Well, looking at our portfolio, speaking for CTP, I think it's all over Germany, because sometimes you drive through Germany and you leave the big cities and somehow you find one of the world market leaders for this kind of technology, for this kind of engine. That is something that is special for Germany. I think that is something unique that we have. But still, of course, also coming back to the Asian, I call it Asian, Chinese, Taiwanese investors or companies looking to Germany. Of course, there are several regions that are attractive. One is the Eastern Germany part around Dresden, of course supported by the government, but also on the other hand, we have the Western part where a huge company, for example, the site we bought in Müller is leaving, and now we have a 300,000 square meter site, and also we have workforce available. So there are different areas in the focus for different kind of reasons. Also, the south of Germany is quite, because we have a lot of startups in Stuttgart or Munich. That is something driving big corporates like Porsche or Mercedes or Mahle in Stuttgart. So every area, I think, in Germany has different kind of focuses, but you cannot limit the light industrial just to the big cities or to a certain area. I think you really have to look at it at every space, everywhere throughout Germany. You can find that type of light industrial.
So this
things.
is again, I guess, that topic of being able to know, having boots on the ground, really understanding what the market is doing. Christian, let me just pick up with you on office, retail, hospitality, hotels, those kinds of things. What's the situation like there, and how does that compare with the super successful ones we've just talked about?
Yeah, I mean, the bottom line for the super successful ones is all about supply, right? Here we are all supply constraints which are driving the market. And basically, the closer you are to the growing cities, the urban locations, the better the rental growth prospects. In terms of offices, of course, one of the most debated sector, I think the flight to quality is present. This is definitely the case. But it's also that we will need offices in the future still. So on a selective basis, I think there are office opportunities given in the German market, because from the pipeline we really do not see any new grade A space coming to the market. So also here we have some kind of supply constraints on a selective basis. Offices with embedded rental growth perspective can still be an attractive opportunity. On the retail side, of course, we are quite busy with the grocery retail sector, not just in Germany, also in Europe, which is quite a successful product and strategy in our view. Of course, grocery-anchored retail parks, very sought after still. Selective again, like offices, it's high street or city center retail. We have seen some family offices being active there. Simply picking the new price environment, and I think that's one of the strongest arguments, new pricing, structural sectors, to return, the return driver of the investment market. So also on a selective basis, city center. You mentioned beyond retail and offices, I think hotels returning as well, the hotel sector, where we see tourists, especially in the tourist center, of course, tourists are returning, increasing the footfall, also interesting for the high street areas, of course. So on a selective basis, we see really core investors watching out, benefiting from the new pricing. So beyond the structural ones you mentioned, I think there are selective opportunities which make the German market, as you explained, quite attractive. It's still a lot about size and liquidity, and that is still a key element of the German market. And then you can pick interesting opportunities.
Okay, good. It'd be interesting just to pick up on one of the topics around financing, for example. For those who are looking for financing, or in general your perception of the financing markets at the moment. Is it now accretive again to investment? Is it something that's available? Is that a challenge in the market? Or is that less of an issue really for Germany? Whoever wants to pick that up? Nobody wants to pick it up. I'm going to take that to the debt panel tomorrow, and we'll be able to see exactly what's happening in that. Lars,
yeah, it is a bit like, as I said in the beginning, in 2008. Then all financing was stopped, and then they decide black, white. So they start with white, and then they move over to the gray. And currently, it's the first, it has to do with data center, but I see anyway, talking to a lot of bankers, that in the last, say, since the war actually started, financing was rather, I would say, really stopped or very low leverage. And now, of course, the banks need to make underwrite business again, because otherwise they don't, or they cannot, so to say, fulfill their business plans, if you want so. You see this on the stock prices, on the equities, how they are valued. You see this on the bonds, each and everywhere. So it's coming back. And of course, they are prepared now that there is the uncertainty about valuation is definitely, I wouldn't say it's gone, but it's on a much better way now, because everybody expects interest rates we will see some steps, some decreases in rates going forward. And at least I think everybody's convinced that values will not deteriorate, which a year ago you couldn't say because you didn't know where's the inflation, where are the rates, what is happening. I think in the Ukraine with Russia, the geopolitical situation is more under control, but it's not saying it's completely solved. Of course not. It will continue, I think. But anyway, rates will go down, and we'll find their equilibrium, and therefore banks can start again, I would say, to lend not only against 30% residential fully let, put it this way, right? And this is what I definitely discover.
So you would expect that to get easier over time?
Yes, definitely.
I think for the land banking we're just using pure equity, which has been very helpful to steer through. For the rest, we are relatively lowly level. And what I wanted to add is that, for example, for newer areas that we want to engage in, like residential and building up living. I mean, there's a lot of development banks who are also active in the market, supporting particularly more innovative concepts, and that should probably be helpful. I think on the financing cliff that is kind of menacing, sort of in the shadows. I have heard now a number of people who said the banks are in much better shape than they used to be, and everyone will sort of kind of kick the can down the road, but there is no this Armageddon scenario of sort of a drastic unwind of everything.
Yeah.
Okay, good. We've got around 3 minutes left, sadly, but that gives me a chance to ask where we think the opportunities are. You can pick a location, you can pick an asset class, but were I to give you my own money, which is very precious, obviously, where would you invest it for me? So let's start with you, Christian. I'm going to check it over the year and see what return I get. Christian, where would you invest my money?
Well, urban logistics.
Okay, good. Okay.
Well, then I'd let Alexander continue.
Yeah, probably.
Yeah, exactly.
No, as I said, first of all, CTP shares. No, but the second thing is the light industrial aspect, I think, because that is a driver, or has been the driver of the German economy over the last 100 of years, and that kind of thing. And that is something I would invest in, and that is the light industrial sector of Germany.
Okay, interesting, because the light industrial sector in general has been the sort of unloved twin of logistics for a little while when nobody talked about it, so it's very interesting to hear that. Lars?
After I've spent all my money in data center, I would invest everything in Germany around living. If it's senior living, it's just because you have such a gap. And 2008 we said we need 350,000 more residentials per year. This hasn't changed the last 10 years. So it's getting worse and worse and worse. So I think with the interest rate where we are now, and it's getting better, so valuation will go up, where you see how the debt and the equity is trading, this is definitely something when you have a long-term view on it.
Great. Rebekah?
And I would say living, of course, living sectors and self-storage, which are very correlated, actually. We need more mobility, more homes, and more storage.
Well, and the smaller the homes, the more storage.
Yes, exactly.
Very self-serving, I would also say senior living, but I mean, to be honest, I mean, I do rate CTP very highly at this, for full disclosure, actually are invested in the stock. But no, I think everyone that sits here on the panel has an interesting sector, and I think that's the opportunity set across Germany, and I think you built this panel for that reason. For me personally, I mean, there's a lot of opportunity in Germany. It depends which type of investor you are. I think senior living is certainly more on a value add side than on an opportunistic, and what we do in logistics is more core plus.
Thanks very much for your insights. Really interesting to get all of these different perspectives on the German market. So fantastic. Thanks to everybody who's watching this online. Thank you for joining us. And if you're watching it on demand, also thanks very much for joining us. Thanks very much, everybody. Thank you.